Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about 7 different stocks that we plan to buy in the stock market in the week ahead. All right, as you can see on the screen, our account's total balance with Questrade and Wealthsimple in total is $127,425, and we currently have about $447 in cash available for trading, equivalent to Canadian dollars. Our average yield for this portfolio when it comes to the distribution dividends is at 1.59% for our Canadian portion of the accounts, but for our US holdings, it's only at a fraction of a point at 0.32%, bringing an average yield for the entire portfolio in Canadian dollar equivalent to 1.23% this time. So far, since the inception of these accounts, we have collected a total of $2,107 in dividend income in Canadian equivalent. Our expected annual dividend income is currently at $1,561.70, which accounts to about $130 per month in dividend distributions. But looking at the breakdown by sectors, you notice here the largest portion of our exposure is to the ETFs. These are not particularly a unique sector and more of a diversified type of exchange traded funds. Close to 64% of our exposures is to ETFs. Other than that, our largest exposure by sector belongs to the industrials, which we have about 11.6% exposure there. We do have exposure to consumer discretionary at about 8.6%, followed by information technology at about 7% exposure. Looking at the biggest holding for our account, you notice 𝗖𝐋𝐈𝖖𝐊, which is the Vanguard All Equity All-in-One Exchange Traded Fund, is the largest exposure for us by about 64%. That's one of the ETFs that consists and forms the largest portion of our accounts, followed by exposure to Boeing. We have about 11.3% of our portfolio consists of Boeing, and then from there on we have some larger exposure to Tesla, which accounts for about 3.7% of our account. This is based on the value of our holdings. So for example, Boeing, because we have a large portion of the funds in our account invested in Boeing, that gives us a large exposure, and obviously 𝗖𝐋𝐈𝖖𝐊, which is one of the largest as well. All right, with that out of the way, let's talk about the 7 stocks that we plan to buy in the week ahead in the stock market. The very first one is no other than Shopify. Shopify is available with ticker symbol SHOP. It's available both in Canadian dollars and US dollars. The one that we are looking at currently is in US dollars based on Seeking Alpha. I wanted to bring to your attention the price to earnings ratio based on GAAP trailing 12 months. You noticed over the span of the past 1 year, and when Shopify was profit making, their price to earnings ratio was quite high at a ratio of about 500. And since then, it has really gone down extensively, suggesting the stock is actually being traded at much lower valuations. Currently, it's hovering close to that 34 ratio. The lowest it has hit was closer to that around 22 or 23, but definitely is much lower than what you had used to see in the past while, like about a year ago. We think based on that, and given how the stock price for the Shopify has done in comparison to the S&P 500, it could be overall good timing for us to take advantage of these declines and buy shares of Shopify. We want to add to our shares of Shopify to fractional shares. Most likely we would buy that to our Canadian dollars holdings. The next pick for us would be no other than Meta Platforms, ticker symbol FB. Its last trading price is hovering around that $216, but the stock has really been hammered over the past couple of months. Looking at the price to earnings ratio for Meta Platforms, FB, currently it's around that 15.7 or about 16. But if you look at it in the past 5 years, it's one of the lowest levels that it has been from a price to earnings ratio standpoint. Definitely much lower pricing compared to what it has been trading in the past. Similar story if we look at, for instance, its price to sales ratio. Let's just take a look at that. Price to sales ratio trading 12 months over the past 5 years. This ratio is hovering to one of the lowest levels it has been in the past 5 years. It has gone at as high as close to 15 times, in many cases hovering around that 10 point, the 10 times ratio of price to sales, but definitely much lower at that level. We think this could be a good option for us to buy shares of FV, bring down our cost average, and invest that for the longer term. Our third pick would be Verizon Communications. Looking at the price to sales trading 12 months for Verizon, although it has fairly stayed stagnant, hovering between that 1.2 or 1.3 mark, 1.6 mark to that of the high of 2. Currently, it is showing at 1.58. We feel that the price to sales for Verizon at these levels are quite justified. And if you look at also the valuation from a dividend perspective, you're going to take a look at it. Verizon is a solid dividend paying company, have been paying it and increasing its dividend for the past 17 years. It has a payout ratio of only about 47%. Their current dividend yield, forward dividend yield, is at 5% plus. And if you look at the stock return over the span of past 1 year, the stock is down by close to 10%. In the past 5 years, only about 1% growth. And the stock is hovering closer to its 52-week low price. We feel that this could be a good opportunity for us to buy shares of Verizon at this time. And if you look at the estimates of revenue for Verizon as well, in 2022, they're estimated to have $136.6 billion in revenue, and slightly growing it into $138.8 or $0.9 billion in revenue as well in the year following that in 2023. That would be our third pick when it comes to investing in the stock market in the week ahead. Our fourth pick would be Dividend Growth Split Corp, DGS. We talked about this. We've made a video talking about DGS and how it manages to pay such a high yield in terms of distributions at close to 17% at this time. We want to continue to buy shares of DGS and build a larger size portfolio with estimated higher distributions. We currently have 105 shares. If you look at the past 52-week price range, the highest price that for DGS was at $7.48 and the lowest was at $5.27. Currently, the last price is hovering close to that $7 mark. The other holding that we would like to add in the week ahead would be a company called Manulife, and this is a financial company. Manulife Financial Corporation has a yield of 3.68%, but only a price to earnings ratio of 7.22, which is quite low even for financial sector companies. If you look at the likes of TD, Toronto Dominion Bank, Royal Bank of Canada, or even Bank of Nova Scotia, they're hovering close to that 12 price to earnings ratio. Here at only 7. We like to add to our existing shares of Manulife. We have had earned a lifetime dividend of $9.41. And if you look at the yield, currently is at 3.68% in terms of the dividend yield. So we would like to build more shares of Manulife and grow it from the existing 10 shares that we have. The price range for Manulife has been in the range of $22.76 and $28.09 over the span of the past 1 year. Next, we would like to add to our shares of Real Matters. It is supposed to be a growth stock. We have currently 592 shares. The stock has been hammered. We are showing a negative 50% return, close to $3,200 in loss. The past couple of weeks, it has started to rebound a tad bit, but if you see the chart in 1 year, you see how it's been doing. We think with the price to earning ratio of 12.96, now might be a good time for us to add to shares of Real Matters, and we would like to buy these shares in the week ahead. And lastly, our seventh pick, Greenlane. Greenlane is also down by about 25%, but if you look at the past 1 year, where things are at. It's kind of rebounded a tad bit at the low levels of around 95 cents per share. It's now currently trading at the price of about $1.10, which was the highest it had in the last trading day. The lowest price in the past 1 year was at 95 cents, as I talked about, and the highest was at $2.13. Our average purchase price for our 833 shares is at $1.47. We would like to add to our shares of Green Lane in the week ahead as well. Well, there you have it, folks. A quick look into our stock investment portfolio that we have with Questrade and Wealthsimple Trade, and the 7 shares that we plan to buy in the stock market in the week ahead. Let us know if you are invested in any of these stocks ETFs that we talked about here on this channel, and what particular ETFs or stocks you plan to buy in the stock market in the week ahead. I would love to hear from you. So leave us a comment down below. If you enjoyed this video, don't forget to smash that like button, and of course subscribe to our channel for more videos about investing in the stock market. We post every week several videos talking about different stocks and dividend stocks, growth stocks, as well as investing in cryptocurrencies and ways to reach financial freedom. Thanks again for watching this video, and I hope to see you next time.